And so this is one that I do because to help me with the strategy that I'm fixing to show you, it pays me a dividend monthly. So I want to collect that monthly dividend, but at the same time, I want to do a little flipping inside of the price movement, because price, now you can't pick a stock that doesn't move, obviously. And I like this because the dividends are huge. So if I'm taking a $30, a $40, a $50,000 position, the dividends, the cash flow that I'm getting to play this game, $300, $400, $500, that's 5 $100 bills for me to play this game. So, let me check my time here. Probably have to break this up so you guys don't grow crazy bored watching me. Again, when I'm talking, this is 20 years of trading, so it's hard for me to compress it into a short period of time. So if this is the price movement, remember I talked about support and resistance? And I meant to bring this down. I didn't do a very good job here. Support is really simple. You draw a line, and it needs to touch what's called pivot points. Pivot points are the tail ends of the very end. These are the things that you draw trend lines on. So if you look at a stock chart, these are obvious. If you're having to look for it, you don't understand it. And let's say this one right across here. And so these are points. The reason is price has memory. Price will go back to where it was before. It's easy to do. So let's say in a housing, because I compare everything to apples, right? So let's say in a housing market, prices pull back real far, blah, 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 right? Let's say all the houses on this street were 200,000. They've pulled back to 150,000. Looks a lot like this, right? They pull back. Doesn't it make sense that it's pretty easy for them to go back to 150 when the market recovers? So if you're an investor in real estate and the market went to here and then it pulls back to here, where you as an investor or trader or flipper or house buyer can get in down here, you know people were willing to pay this at one time. And so if the market conditions improve, it makes total sense that price will come back. There is no ultimate high. It just keeps going as new people are born, the economy recovers, there's new money. Look at California. Look, every town in America could be like California. Literally every town could have houses that are 500, 600, 700. Like, oh, they can't go any higher. Yeah, they can. They can just keep going. There is no limit to this shit. Same in the stock market. Amazon could go to $10,000 as long as people keep paying it. And they will keep paying it. One thing there's a lot of dumb people in the world. You have to believe that. The reason, so here's the thing, another fundamental concept in the U.S. stock market. One, I said you got to believe in the 4 stages. 2, I said we can identify those stages, right? We need to, but here's something else. Markets always go too high, and they always go too low. And that is good for me and you. That gives us that, you know how I said 70% of the time they go up? That gives us this, which gives us opportunity. See, so we need crashes, we need downturns, but we just need to be able to identify them. So, using the idea of the 4 stages, now we throw in a 20-day moving average. Now, I'm not going to draw this as good as you can see it on a stock chart, but you're going to see something like this happen. This is the 20-day moving average. And again, I'm not doing a very good job drawing this. What this does, this 20-day moving average, it tracks each one of these bars is 1 day. So if you're an expert trader, bear with me a second. Each one of these is 1 day. And what a 20-day moving average is, it adds this one, 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 all the way to 20. And then it divides and finds a common, it divides by 20. So you add up all the prices, just like if you drove and gas today was $2, and then tomorrow it's $2.05, and then the next day it's $2.25, the next day it's $3.30, the next day it's $2.40. You could say, well, what's the average price over the last week? You'd say, well, $2.15, right? In the middle, the average. So that's what this line is finding. And you notice price broke out and ran up. It's getting away from the average. Why? That's called an uptrend. Simple. If price is above the average price, it's in an uptrend. If price is below the average price, it's in a downtrend. If price is above the average, it's in an uptrend. And so if we believe that the markets go up, but they go like this, stage 1, stage 2, stage 3, stage 4, stage 1, stage 2, stage 3, stage 4. Now, it doesn't have to go in perfect order. It could go stage 1, stage 2, stage 1, stage 2, stage 1, stage 2. It could just keep doing that. And so I just figured out how to identify these, just like playing blackjack, where I do the same thing. Consistency. Repetition is the mother of skill. And so I began to identify these zones. And again, if you get my book, shameless plug, if you get my book, you can just take your time with this. It's hard to do this on a video. It's hard to do this on here. It's 150 pages. I got chart after chart after chart. If you follow me on Instagram, I post this shit too. I'll probably post so much you'll probably stop watching. But I love what I'm doing, and I'm trying to get rich. I'm trying to get rich doing this shit, man. Truth is, most people are too busy being busy. You know what I mean? People I talk to, oh, I'm busy with work. They make $60,000 a year. How are you gonna get rich on that? You know what happens when you make $60,000 a year? That's it. I mean, it's a good income. I never made more than $12.50 at a job. So you're making more than I ever made at a job. But you ain't worth millions of dollars. You got to do this shit, man. Listen to me. If you're a plumber, drive for UPS, work at Walmart, anybody can play this game. Anybody can play the real estate game. These are the only two games that are going to make you rich. There's only 3 ways for you to get rich. Own a business. Like you're the owner. You own the fucking place. Own it. Or you work there and take the money that you make and put it into business, i.e. the stock market or real estate. That's it. And so if you're living life right now and you don't own the business and you don't invest in the stock market and you're not investing in real estate, welcome to the fucking land of poverty, because that's where you're headed. So you could get your head out of your ass and start playing the game, learning to invest, or just be poor. That's an option too. So enough lecturing, right? So we have all this going on. And so here's what I do. I buy I hold a core holding of about 1,000 shares. That pays me $160 a month. Now, man, this is one in about 42 of these I'm doing. But this 1,000 shares pays me $160 a month. So down here, I got 1,000 shares. When price breaks out, which I define a breakout, is price, the basic definition, there's a little nuances in the book, but the basic definition is price breaks out and closes above the 20-day moving average. That's a breakout. Stage 2 process breakout. Another fundamental rule that I follow is whatever price is doing, it will continue to do until it hits a force that literally changes it. So I believe that trends are much like what is the law of motion. What's in motion will continue to stay in motion until it's hit with an equal or opposite force which causes it to change. So I'm not trying to guess. I'm not going to Yahoo Finance. I'm not reading other people's fucking opinions. Price broke out. It closed above the 20-day. That's all I need to know. I now go in $30,000. Where's my stop on this? Down here. I do not put in a hard stop. If you wake up and there's a price shock, you could blow your account up. What is a price shock? 9/11. I lived through that shit. Stock market opens up 21%. Guess what happens if you have a stop loss on? You're stopped out. And guess what happens immediately? Money flows in and buys that shit. And you get left. You get left. Flash crash. I lived through that. You know what happened to everybody that had stops? Blown out. This is not Forex. I'm not trading shit like Forex. This is not binary options. This is not futures contracts. Okay, so we're not doing, you don't need a hard stop. You just need a logical stop. You need to say and have enough discipline and courage to honor your stop. Okay? You're not babies. We are grown people. We don't need to put in a hard one. People say, well, I'm at work. Check your phone. Shit ain't hard. You go to the bathroom. So I don't use hard stops. That's my 2 cents. If you want to use them, use them. A lot of gurus teach you, but listen, a lot of gurus don't actually do what I'm showing you. They don't actually do this shit. They just teach it. The guy who sells the most trading books in the world, he doesn't trade at all. He just sells books. He doesn't trade at all. Most of these real estate guys, they don't actually do real estate. They teach real estate. Now, that doesn't mean they're bad teachers. There's a lot of guys that are great football coaches that never played football, okay? So that's not a 100%, but it does come into play here. So price breaks out, we get our, and again, it looks bad here, but we get our stage 2 breakout. I have a couple other indicators that I use. The RSI is one, When RSI gets overbought, you can look this up, RSI, I use the standard out of the box 14-day. When price runs up too far, RSI will tell you, hey, prices move too far too fast. And almost always it turns. Almost always, not always. But when that happens, I sell 1/4 of my position to lock in that profit. Remember, I had 1,000 shares. I now added another 2,000 shares, so I'm sitting on 3,000 shares. And if 3,000 shares run up and the RSI signals over 70, you have made some money. I promise you, a chunk of money. So we're going to take some of that off. We're going to be prudent. We're going to respect the fact that the RSI indicator works. And we also know that markets don't go straight up. They go through cycles. So it moves up. The next logical place that I would sell would be price closing below the 20-day, giving me the exact opposite signal it gave me when I bought it. So see, breaks out, closes below. The meat between the two is where my money is. Now there's little nuances along the way. One is the RSI. In other words, as price moves off, I can scale out of the position. So by the time we come back and sell off and give me a signal that says, hey, stage 4 decline, I've already taken profits 1, 2, 3 times maybe. And so I don't have near as much on when that happens. And what do I do here? I go back to my 1,000 shares. I write it down, write it down. These drops could take a month, 2 months. I collect my little dividend on my 1,000 shares. When RSI gives me the opposite signal, when RSI says, hey, prices drop too far too fast, we respect that. And I put 1/4 of it back on. So here we had our stage 2, price closed below, starts going down, 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 down. RSI says it's gone too low. I put 1/4 back on. Why 1/4? Why not go all if that's possibly the lowest point? Because that's probably the stage 1. When stage 1 occurs, you're going to see the RSI go -70. Why would I not go all in? Because sometimes it's wrong. And you're buying into a downtrend. Yeah, you're playing a reversal here with part of the position. But what happens if it just keeps going? Well, at least we got in on a low and missed some of it, right? So this is part of the strategy. If that happens, when RSI gets too low again, I look to add it again. I just stay with the strategy. I stay with the rules of the game. And then when it turns on the breakout, I'm gonna buy the rest. And up we go. Now, this is terrible drawing, I realize. So let's try to do a clean one of all that I just said. So what all am I looking at? I can't draw it all on here, but the 4 stages, support and resistance. I'm using the RSI indicator. I also use MACD. It's kind of hard to draw that on here. It's all in my book. This is for profit targets. Profit targets, we'll go PT. Support and resistance can be profit targets too, and I'm going to show you that. And then we're using the moving averages. And the moving averages tell us what of the 4 stages we're in. And so I trade with the flow of the market. Not anticipating, not guessing, not fucking predicting. I don't have any clue where price is going. But here, just like blackjack, you could be a really good card player, know exactly what to do, but you got to play the cards you're dealt. You don't know what the next card is, but you can create a strategy to play the game the most effective. This is trading. What I'm showing you is trading. This is not investing, okay? Now, you can modify my strategy to just buy on the low points, which is what I do for my investments. So remember, I told you the RSI, on most charts, RSI looks like this. That's what RSI looks like. And inside of this, RSI is going to do this. Well, it'll go down. When it goes down, you're going to see an extreme reading. When it goes up, you're going to see an extreme reading. This is what I care about. I don't care about this shit in the middle. This is what I care about. And so often on a stock chart, you're going to see like this. And when you see that, if you drew a line, it's going to be on the bottom. And so if you use this to when to buy, you're always buying on the bottom. Now, this is going to take a minute. You got to get money in. You got to get some positions going. This takes a minute. You're not going to just step in doing this. But over time, see what? So I collect thousands and thousands and thousands of dollars in dividends every month. Just dividends coming in. Where do I apply them? I want to buy stocks that are doing this for investments. Which means as an investor, I want to buy into a downtrend. I want to be greedy when other people are fearful. But as a trader, I got to limit that because my capital's limited for trading. Like, you know, flipping. You can't just buy a house, put any old amount into it, and then flip it. You might not make any money. Same with trading, right? So these things work together. So let's make a cleaner version of this. So our 20-day would look like this. This is our stage one. Prices are kind of going sideways. Price breaks out. Price breaks down. This is almost exactly what it'll look like on your chart. So these points, stage one, see the stage one, stage three. And so we catch the breakout, we go all in, and RSI is going to be plotted on mine right up here. And often you're going to see this. It'll start to turn up with price, and then it's going to go extreme. There's your extreme. If you go down, it's right at the top. I'm shocked. I mean, literally, this happens so much. It's shocking that it still works to me. Breaks down. Stage one, we're going sideways. See, it didn't go very far. So on this reading, it may not get too extreme. Sometimes this is what happens. You don't get the extreme reading because it drops for a minute, goes sideways, sideways, sideways. It's pretty obvious it's a stage one, but maybe it's not yet. We don't know. We don't know until it confirms. And then when price breaks out over here, all of a sudden, it starts to go back up. And then, now you can get into tricky situations where RSI will hit an extreme super quick, but then price just runs on. When that happens, the oscillators, see the RSI, MACD, these are oscillators. They're trying to catch the movements within the last 14 days. So if it goes on a run for 100 days straight up, RSI will be of no value to you at that point. So we want to catch that run. We don't want to limit ourselves, so we can't remove it all. Even though on a lot of charts it looks like you could do that, you don't want to do that or you're going to miss the huge winners like McDonald's, the Netflix, Tesla. You're going to miss them if you do that. So we want a way to respect it and take profits, but at the same time give our position time to move. And so that's the beauty of the 20-day moving average. So the 20-day moving average and the RSI working together with support and resistance. Let me show you an example of how support and resistance could help you know to take profits. I'm in it right now in the S&P 500. So right now, if you go look at the S&P 500, you're going to see this. And this is where it's at right now. As of this recording, what is today? September 22nd or something? This was a previous high. I told you price has memory. You can draw a line, and price is literally bouncing off of it. That is resistance. So I got long the S&P 500 using the U-Pro as a trade, a flip, when here was the stage one, there was stage two. You can see the stages, right? So there was the stage two. We fell all the way until the RSI gave an extreme reading. I bought some right there. Not a lot. 25% of my trade I bought right there. The exact day, this is the day that Trump did the tweet and Dow fell 800 points. I bought fourth of my position in the 3 times U-Pro. It's the 3 times leverage fund that trades the S&P 500. Why? Stage one, or still a stage 4 decline. But once this happens, I go ahead and kind of assume we're probably in the stage one. Yet to be determined, but most likely. And sure enough, we got a big book. Moved up. Soon as price closed over the 20-day, that's my confirmation stage 2 breakout. I buy the other 3/4 of my position. I move my stop up a little. Boom, we take off. When do I sell? Well, did we hit the RSI? No, we didn't hit the RSI, but guess what happened? Price got to the previous high. I draw my line. And it stopped on a dime. Boom, stopped. Stopped moving. Why? Price respects resistance. An equal opposite force. Something. This is the force. That's a force. An equal or some other force has to push it through. Otherwise, they're like, hey, we didn't go any higher here. Why should we go any higher here? The news is the same here as here. Nothing new has changed in the economy. There is no reason for price to go through this. Right? We have tariffs going on. There's all this confusion. There's been a fucking drone strike. All these things. Something's got to push us through or we will